Welcome. In this video, when will Xcn coin price rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the charts are examined carefully, it becomes evident that price movements have been clearly confined within a downward trend line for some time. This structure indicates that investors have historically made sell-side decisions, guiding the price in that direction. However, in technical analysis, no downtrend lasts forever. On the contrary, trend lines gradually weaken over time, lose strength, and it becomes increasingly likely that the price will break through these boundaries and move in a new direction. And right now, this is precisely one of the most notable developments in the charts. This long-standing downward trend line is now being seriously tested. The price has approached this line and is currently on the verge of a breakout. At this point, if buyers step in and significant volume increases occur, the breakout could be strong and lasting. Especially in technical analysis, the breaking of a downtrend line is not just a technical detail, it also signals a fundamental shift in market sentiment. Because when a downtrend is broken, investor psychology tends to turn more positive, which can accelerate the price's upward movement. We've seen the price touch this downward trend line multiple times, only to be rejected each time. But this time could be different. Each touch weakens the trend line a bit more. This increases the likelihood of a successful breakout in the next attempt. If the price manages to break above the trend line decisively, it could inject fresh energy into the market. With this momentum, a move toward higher levels may become inevitable. That's why the current consolidation phase holds great potential. Breaking a downtrend doesn't just mean a change in price direction. It also alters the market's momentum, volume, and the balance between buyers and sellers. When such key technical levels are broken, algorithms, institutional investors, and funds often step in. This makes the rally not just a short-term bounce, but the beginning of a more sustainable and structural movement. At this point, one of the most important things to watch is whether the breakout is supported by volume. If there's an increase in volume, it suggests that the breakout is not false, but the sign of a strong upward move. When a downtrend is broken, the price usually moves upward for a while, then returns to retest the broken trend line. This pullback presents a renewed buying opportunity for investors. If the retest is successful and the price remains above the trend line, it further boosts market confidence and increases buying pressure. In this way, the foundations of a new uptrend are laid firmly. These types of structures in technical analysis offer strategic opportunities for both short-term traders and medium to long-term investors. Additionally, the breakout of a significant resistance level like a downtrend line can trigger chart patterns. For example, cup and handle, inverse head and shoulders, or flag formations may become active following such breakouts. This suggests that the price is not just breaking a resistance level, but also forming the technical groundwork to aim for higher targets. That's why this downtrend breakout could be more than just a resistance break. It could be the doorway to a whole new bullish journey. In such scenarios, the most important thing investors need to do is be patient and wait for confirmation of the breakout. One of the golden rules in technical analysis is no trade without confirmation. Taking a position only after the breakout is confirmed will protect investors from unnecessary risks and help them make more solid trades. Therefore, any attack on the downward trend line should be closely monitored, and action should be taken only after the necessary confirmation signals appear. But we can't rely solely on trend lines for analysis. Let's now take a look at other metrics. Stay tuned. When the chart is analyzed, a striking ascending channel formation stands out. These types of ascending channels typically appear during periods when the price is steadily trending upwards and offer strong clues about the market's overall direction. These structures indicate that the price is moving within a certain upper and lower boundary, forming support and resistance at specific points within those limits. Especially for medium and long-term investment strategies, such formations provide highly valuable reference points. In the current scenario, the price has moved up to the midline of this channel, but appears to have faced temporary resistance and pulled back. The price's inability to surpass the midline may create uncertainty for some investors. However, this does not mean that the overall upward structure has been broken. On the contrary, such temporary pullbacks often signal periods where the market is consolidating and preparing to gain renewed momentum. Short-term declines within ascending channels frequently turn into upward reactions, usually supported by the lower boundary of the channel. Therefore, the current situation should not be viewed as negative, but rather as a positive preparation phase that should be monitored closely. The midline of such formations plays a dual role, both as a target and as a psychological threshold. When the price reaches this level, it often pauses briefly, leading to profit-taking or new buying and selling decisions. However, once this level is surpassed, technical analysis frequently shows the price gaining momentum toward the upper boundary of the channel. In this context, the current price movement failing to break through the midline could simply be part of a gradually unfolding bullish scenario. Once the price regains strength and crosses this threshold, the upper boundary of the channel will become the next technical target. The fact that the price hasn't broken through the midline also shows that the upward potential is still alive and that investors are watching closely for this opportunity. In ascending channel structures like this, breaking through the midline is not just about overcoming resistance. It's also a strong signal that buyers are gaining dominance in the market. At this point, if volume increases and supporting technical indicators align, the price is expected to move upward more decisively. Channel formations are not just technical boundaries, they're also visual representations of investor psychology. Every interaction with a boundary is a moment of decision. The current midline touch represents such a decision point in the market. If the market resolves this with an upward breakout, it will indicate that a positive market sentiment is supporting the rally, likely accelerating the move toward the upper band. As a result, both short-term traders and medium-term investors could enter a profitable period. Additionally, analyzing past price movements in such situations is highly beneficial. In previous similar channel structures, after testing the midline several times, the price has often broken through decisively and experienced significant rallies afterward. These examples increase the likelihood that the current process may conclude in a similar fashion. Therefore, it is crucial for investors to remain patient and adopt a strategic approach to avoid missing major opportunities. Another important point is the symmetry and balance of the channel formation. The current ascending channel appears to be quite orderly. This suggests that the price is moving in a technically healthy manner, avoiding sudden and erratic movements. Such orderly formations boost investor confidence in technical analysis and help them make more confident trading decisions. The MACD indicator is one of the most commonly used and powerful indicators in technical analysis that helps to understand price momentum. In particular, the intersections it provides to determine the market's momentum and possible changes in direction generate vital signals for traders. In the current situation, the MACD lines made a downward crossover from previous highs. After this crossover, there may have been a correction or a short-term slowdown in prices. However, there are some signs that this process is over and that we are on the verge of a development that could herald a new bullish period. The MACD lines are currently converging from bottom to top. If these two lines intersect again in a positive direction, that is, if the MACD line moves above the signal line, this may have the potential for a very positive attack in terms of price. Usually, such upside MACD crossovers are interpreted as a signal for the start of a new bullish move. Such technical signals can cause many traders to rebuy positions, which can lead to a strong upward acceleration in prices. We should wait for the crossover on the MACD lines. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.